let's talk about some of those before we get to the market view as well. Manav Chopra, he's head of research for equity at Indiabulls Ventures. He joins us right now on the show. Manav, good having you. Thanks so much for joining in. We'll get to the index in a bit, Manav. I was just trying to look at the index components and the kind of trades that are happening in select stocks, which are, well, interesting. After days and days of strength, Reliance starts off on a very weak note with no apparent reason. Would it be routine profit booking to your mind, or could this get exaggerated a bit, this 2% fall?
No, I think, looking at the move that the stock witnessed from its lows of 900 and all the way towards 1035, I think this is more or less like a profit booking. I sense that on the immediate basis, the lower support will be close to the levels of 980, and that would be the levels where, one can look to re-enter for a very short-term basis. The overall trend looks to be positive, but, Neeraj, I also sense that, after such a sharp move, usually, the stock will want to consolidate or form a higher base. So there may not be too many trading opportunities in Reliance going forward, but, given a chance, if you get to only buy near the support areas is when one should look to getting long into this.
All right, Manav, can you tell us a little more about how you're reading cues, say, over the next 3 weeks with respect to the Nifty bank specifically, what you are tracking in terms of levels then?
Bank Nifty actually, has been overall, after that sharp move, it has been more or less 4 weeks of sideways consolidation move. I sense that, the markets are actually just cooling off for a bit. We have seen a good rally from its recent lows of 23,600 and, a non-stop rally of 4.5 around towards these 27,000 marks. So I think a short-term consolidation above its short-term moving averages and short-term key support areas is still giving that comforting level. The important support for Bank Nifty on the lower side on the weekly basis will be 26,200, and the resistance will be at 26,700. So until unless we don't break beyond this range, I don't see any trending action into this. But from the banking space, I think the PSU banks like SBI or select a PSU bank like Indian Bank, they are showing some sort of a bottom formation. So I would be quite interested to look at the charts of SBI very closely. In case if SBI starts forming a bottom on the weekly basis, is then I would get a little more confidence about Bank Nifty maintaining its weekly support level. So for me, 265 for SBI would be an important support, and Bank Nifty 26,200 would be the support for any positional long trades.
Interesting. Manav, before I talk about stock ideas, just a word on the Bajaj twins. Almost every single day we see them do well. Corrections are being bought into. Bajajfinance is now at 2315. That's arguably as expensive as an NBFC can get, save for, of course, maybe Growth Finance. What does one do here? Both Bajajfinance and Bajaj Finserv.
Actually, it is a purely momentum play, to be very honest, in spite of the indicators being also in overbought zone. So every high the stock is making, it has been confirmed by a good volume. So that clearly talks about the strong trend or the conviction the traders or the investors have into this stock. So the best idea is actually to play into this, Neeraj, in past conversation when we spoke about Bajaj twins, we had clearly updated that one should actually not look to predict a high into this, but one should actually keep trailing the stop losses and take advantage of these trends. So when a stock gets into a very good mature trend, you often see some sort of movement which is beyond certain expectation. I think that is exactly what we are seeing into this, and more or less, these stocks are also acting at safe havens. I still continue a positive bias into this, and for Bajaj Finance, I sense that now one should continue having a trail stop loss at 2270 on the lower side, which is its important weekly support, and you could also see this trend move forward going forward on the similar lines for even Bajaj Finance and Bajaj Finserv. These trends are still in a very good short-term momentum play.
Manav, we've seen a lot of strength in pharmaceutical stocks, and I want to address Sunpharma specifically. Can we pull up Sunpharma and see where it's trading at? It is one of the top Nifty gainers in today's day of trade. It is advancing by another 3%, and there you have it. It's edging towards a mark of around 575, actually at 570 currently. And we have seen a reasonable surge in volumes as well. Manav, how would you deal with Sunpharma right now? Can you expect this uptrend to continue in the near term, or would you expect some consolidation or profit taking to come in?
The overall trend reversal has already taken place in Sunpharma. When I talk on the weekly perspective, the daily trend is still positive. For the short term, the stock after a consolidation has observed a breakout today. So, even the short term consolidation trend has turned positive. So, net, I expect this momentum to continue on the upside. One can maintain a stop of 560 on positional basis for the stock. Eventually, I will not be surprised to see if the stock retest its its previous few months high, and going forward 600 to 630 could be the positional upside targets.
Interesting. Sarvendra Srivastava also with us on the show. Sarvendra, good afternoon. Many thanks for joining in. How are you approaching trade today, Sarvendra? It's a bit of a nothing kind of a trade today. Yesterday too was a rather flattish day. What is the near-term trend looking like?
Yeah, very good afternoon, Neeraj. Nothing trades are happening for last. This is the seventh week. This is the seventh week at 10,800, 10,700. So it's been a nothing kind of a last 1.5 months now, with one brief spike on the downside. So I was just, if you look at the weekly setups, more or less 10,700, 10,800. It's been almost now for 2 months. So yes, there's no net direction. It's boring a little bit because the intensity of trades that we used to do earlier and what you can do now is definitely reduced. So people are getting a little bored, but it's from this boredom that a trend would emerge. So I would believe that the trend would soon emerge, but right now it's a little boring.
Right, Sarvendra, this is Agam. So in that case, how would you approach the indices? What would you do with something like a Nifty or a Nifty Bank then?
See, Agam, very good afternoon. See, the whole issue is that now you have to take your macro theme and the larger macro technical call. I am not a macro fundamental guy. I'm saying macro technicals, the way I look at them, I still believe that this is an even year. It's going to be a bad year. It's already been bad for mid caps, small caps. The only thing is that few large cap stocks which are not falling, and that is why probably you are seeing a Nifty which is little skewed. So Nifty is skewed, Bank Nifty is little skewed because of 4-5 individual components, but rest, if you look at the markets, we are already in a bear market. So my sense is that the Nifty will eventually fall, and it has to go and reset along with the larger market, which is the 70% of the theme which is already corrected. So I would say that those targets are still at 9,700, but for the week when we have to give a trade, and for the next 10 days, I would say 10,400, which I had mentioned last week as well. The same levels, everything is same. The market has not moved, and the stop losses are intact, the targets are intact, so the call remains same, that we are headed for 10,400 on the Nifty. I would keep a stop loss on that one, similar to the last time that we had. So we will keep our stop loss at 10,931.60 on a closing basis, and this will be a positional sell Nifty, which we can probably revisit and revise targets once 10,400 is broken. So you will get the lower targets at 9,700. And for the Bank Nifty, I would say a similar kind of a setup is at 26,600, 26,700. There is a brief possibility that you might do 27,000 once more. That's it. After that, the way we are now spending time, and now the way the global piece has started to turn, the way now global piece is turning and getting negative and ugly. So Brazil is broken. Its monthly swing lows, quarterly swing lows now down 20% from the high. Dow has also now started to turn from 25, 26,000. DAX has started to turn. FTSE has started to turn. I would say that the next leg down for the Bank Nifty itself and for the Nifty would be much lower. So Bank Nifty also, I would give a 10-day target, say at around 25,500. And I would say that when Nifty goes to 10,400, we should be at somewhere around 25,500 for the Bank Nifty. And you would be keeping a stop loss there above 27,000 on a closing basis and wanting to short Bank Nifty as well. So both the indices, my sense is now that the time is up, and the next leg down, a sharp one, is around the corner.
All right, so let's take our experts trading picks then. Manav, coming to you, what stocks are you betting on at this point in time?
At current levels, my first buy call is on Ultratech Cement. We have already seen a sharp series of decline into this stock from its recent peak of 4,200. It is in deep oversold levels, and Also, there are other stocks from this pack, are showing some sort of a reversal formation. So this will be a pure short-term play from its oversold levels. The volumes are also indicating, there are some sharp short covering which could take place going forward. So at the current levels, it will be a buy with a stop of 3580 for an upside target of 3,800. And my second pick will be buy on Ashokley. Similar formation, the stock has tested its important weekly support near its long-term averages, and there are some positive divergence on the short-term parameters, which indicates at least for a short-term reversal. Keeping that in place, 132 would be the stop on the lower side for an upside target of 142.
And Sarvendra, how about you? What are your stock calls for today?
3 trades as usual. I would be looking at those trades. One trade is on the buy side, so only one trade that we are giving today is a buy side because we like what it has done, and that name is Castrol. I think Castrol is now finding multiple supports around these areas, 168, 170 thereabouts. I think the stock has started to stabilize. So an outside trade, as I said, this is not from the larger basket, which is on the sell side. So only one pick from the buy side. Buy Castrol around 170 levels. Look for a target around 190, 188, 190 on the upside. Another 7-10 days, this should be possible. Keep an early closing stop loss at 159.40. So it's not a tick stop loss. So say 60 minutes, we are below that number on the stop loss. You're out. These are spot levels. The remaining 2 trades are on the sell side. The first one being Apollo Hospitals, where we believe that the bounce probably is over, a gap down today, and the stock wanting to correct. My sense is that ideally the lows will be visited, which is 920 thereabouts. But again, for a week, I would say 950 is possible. So 950 is the target. You sell Apollo Hospitals, stop loss at 1051.60, early closing basis. And the last stock where we believe this stock will be responsible for the Nifty going down, and that is Reliance. Reliance, we believe that we are headed for 920 on the downside. So these are spot levels. A sell on Reliance for a target of 920. A stop loss kept at 1061.60 on an hourly closing basis.
Interesting. Okay, let's talk about some fundamental stocks fundamentally as well. TS Harihar, founder and chief executive officer at HRBV Client Solutions, joins us right now on the show. Hari, good having you. Thanks so much for joining in. Before I talk about the stock that I really want to talk about, and that's Bajaj Finance, just a quick thought on Reliance Industries. The bit of a pullback today, but a stock in an otherwise extremely strong uptrend and lots of pieces working for it. What would you do here?
See, honestly, I wouldn't be too worried. I think Reliance Industries appears to be in a kind of what I would call a sustained uptrend. Now, obviously, I think this is going to be interspersed with bouts of correction. And we have seen the stock in the last few days, I think, going from about 920 to about 1020. So I think after 100 rupee rise, probably I think a 1 or 2% correction is nothing to be worried about. If you look at the various pieces of Reliance, be it the petchem margins, be it the refining margins, or more importantly, what is happening in the telecom, I think it is already number 3. It has gone past Idea. It is going to be number 2 shortly past Vodafone. So I think we are probably seeing real traction on all the businesses. So I don't see any reason why the stock should correct in a big way. Probably I think intermittent interspersed correction is fine, but I really don't see any negative cues as far as the stock is concerned.
That's interesting. The next one, and I don't know if the camera can really focus on this chart or no, but if we just pull up this camera on this chart on my computer screen, and that's the market caps of Bajaj Finance versus Axis Bank. And if you just look at this blue line, that's the Bajaj Finance market cap. This rather is the Axis Bank market cap, and this white line is the Bajaj Finance market cap. And you can see that there is an uptick in Bajaj Finance. It's now valued more than Axis Bank. Hari, it may not come as a surprise to too many people, but Bajaj Finance, an extremely expensive stock, continues to find favor. It's much like how the valuation in Growth Finance started rising and then stayed higher. We're seeing the start of something similar in Bajaj Finance. I'm not saying it will stay that way, but people are happy buying Bajaj Finance despite the valuations.
See, I think what people are now distinguishing is between companies where there is a huge hidden risk versus a company where there is no hidden risk. And I think people are willing to pay, I would say, filthy valuations for companies that don't have hidden risk. Now, let's look at a larger example. Globally, if you look at it, HDFC Bank has a market cap that is more than Deutsche Bank plus Credit Suisse First Boston. Now, that is something that was unimaginable 10 years back. but that has happened today. So I think globally and in India, there's a very distinct shift that is happening. People are willing to pay crazy valuations for company where there is no asset risk, but stocks like an ICICI Bank or an Axis Bank where they perceive a certain amount of asset risk, I think people are just not willing to pay any money.
But Mr. Hariharan, at any point in time, would you, I know it's really hard to call Bajaj Finance as being overbought in this point in time, but at what point would you start getting cautious because of the surge in both Bajaj Finance and Finserv that we've seen? It surpassed all expectations. There has to be some breaks at some point in time.
See, I think it would depend on probably, if you've been in the market for about 20 years, you would know what happened to NBFCs 20 years back. And there were 40,000 NBFCs in India in 1995, and I think by 98, there were just 3 NBFCs left. So what happened was that RBI actually tightened all those asset classification and capital adequacy. So my hunch is NBFCs in India could have a problem if the RBI intervenes and decides that probably I need to tighten the screws. I think if something like that happens, then NBFCs is a problem. Other than that, I don't see anything really kind of curtailing the move. See, let's also understand that today when you talk of NBFCs, it begins with Bajaj Finance and ends with Bajaj Finserv. Now, all the others actually are becoming insignificant. I'm not counting HDFC because that's not exactly a traditional NBFC. So NBFCs today, if you look at the most valuable ones, it's Bajaj Finance and Bajaj Finserv. All the others are much relatively smaller. So basically, I think anybody who wants to buy a quality, it's like if you want to buy a quality bank, almost anybody and everybody goes and buys an HDFC bank. So I think a similar situation is playing out in the NBFC space also. So you are right. If you look at it in PE terms, it probably looks expensive. But as I said, the same story applies here. People are willing to pay more where they don't see an asset risk, and they're not willing to pay anything where they see an asset risk.
Such a sharp surge in Finserv as well now, 2.5% higher at 6140. And this stock too hits fresh highs in the session today. In fact, I was just looking at the list of stocks which in the last half an hour or thereabouts have surged. Yes, Bajaj Finserv right up there. A couple of others, the likes of Equitas and Ujjivan too, have perked up in trade in the last few minutes of trade. So bring those up. The markets too, in fact, now up 0.4%. So clearly financials are leading the charge higher. It's not just happening on the Nifty. At the broader end too, non-Nifty too, financials are starting to move up. Manav Chopra, any thoughts? Any trades? Nifty banks, the surge? And then, of course, coming on the NBFCs, Ujjivan is up, Equitas is up. A couple of other names have started moving up as well. Do you like anything for a trade?
See, from the current levels, when we're looking at the chart of Equitas, the stock.
Now, just hang on, Manav. We just need to cut to the Bloomberg network. OPEC updates are coming in.
Listeners, it's just really impressive because you have to fight for your life to get that quote, right? That can move the price of oil, Tom.
Yeah, Venezuela hopes to recover lost oil production before year end. Bring this over here. There's the drama of what's going on in Vienna, which is not much drama. This is why you have a Bloomberg terminal. This is Top Live, and this is a blog. And what's important here is the intellectual input of Will Kennedy, Jack Farshey, Colin Keatinge, and others. And this is the gossip run of our reporters that goes direct to terminal users as well. This is something that's fairly new at Bloomberg. We're really thrilled with this for these big events. But what it really amounts to, Francine, is the news flow here is so great. The elites, the leaders, the OPEC cartel leaders, they can't control the game anymore, can they?
Well, they can't control the game, but you have this new alliance, Tom. And, when you look at geopolitics, this is probably the big surprise of the beginning of 2017, is that the alliance between Saudi and Russia is holding. What we understand from our people on the ground is that they're hearing a lot of positive vibes from the ministers of Venezuela saying there is an OPEC agreement with all the countries. I think, Tom, now what markets want to know is whether Saudi Arabia had to compromise the amount of oil that they wanted to put on the market to put Iran on side. If you look at, what we heard yesterday is that it was Iran that did not want to put extra barrels of oil on the market. So, of course, we'll keep a very close eye on that scrum. Brian, if you look at, OPEC, I guess, first of all, the fact that the president could tweet anytime, like he has in the past, about OPEC not doing enough, about OPEC and the alliance with Russia, about shale gas. Is it just much more difficult to predict the price of oil now than it was 10 years ago?
I think OPEC's become has regained some of its traction in the last 12, 18 months, right? I mean, it's sort of 2014, it seemed that they just kind of disappeared from as a player in the market. Shale took them by surprise. But I think they're kind of back because the compliance with the previous agreement was much stronger than anyone expected. So they are a player again. So I think if we do get a significant increase in output committed here, that for us helps us put it on a medium-term path of bringing prices back below 60 in the medium term. But it's going to be a slow process. I don't think they want prices to rise very dramatically from here because they know the shale reaction will be very aggressive.
Right. When you look at the linkage here of oil and the price it does just simply come down to global growth. Does Fitch have a call on global growth right now?
Global growth is strong right now. We're talking 3.3%, and even though we had some soft numbers in Q1, we haven't revised that down since the forecast that we're making at the beginning of the year. So global growth is strong. I think the demand side has been part of the oil price strength here. Everybody's been focusing on the supply and the Iran issue and Venezuela's production, which has gone down 25%. But I think there is a demand element here, and that for me is one of the reasons why the oil price is only going to go back slowly to its equilibrium, in my view.
Andrew, is the demand there in Europe? I mean, one of the great mysteries through this week into our weekend reading is whether economic growth and oil demand within Europe. Where is it?
Economic growth, maybe it peaked sort of middle of last year, but we think it's still pretty strong in the Eurozone.
Andrew?
Yeah, so the potential growth in the Eurozone is pretty low, but in a number of countries it's punching above potential. So, we put out a piece at the end of last year, peak growth. We think we've actually seen the peak of global growth. It's behind us now, but for right now, the momentum is strong, also here in Europe.
Okay, the momentum is strong in Europe, but what makes you worry about Europe, Andrew? When you look at Europe and some of the concerns, I don't know whether it's what happens to the euro, I don't know whether it's immigration or how you deal with a populist Italy.
Now, so Francine, one of our concerns then is how will Europe respond to the next recession? Now, we're not saying that the next recession will necessarily originate in the Eurozone. In fact, we probably would think there's a higher probability of it originating in the US. But if and when it does occur, Europe's going to probably have quite a difficult situation to respond to that because the ECB will probably not have as much ammunition in its toolkit as what it did have last time when it started, and fiscal policy will probably have to pick up the burden, but there's a very big distribution of the capacity for the member states in the Eurozone to use fiscal policy. Those that probably will need it don't have the capacity, and those that have the capacity don't really need it, and there's no federal structure to spread it all around. So we're a little bit concerned about how Europe behaves, how it responds, how it copes with the next major slowdown. And then you've got all the geopolitics like we are seeing right now on immigration issues and governance structure meetings between France and Germany ahead of the summit. All of those things on top as well.
So what does that force you to do with bonds and debt in Europe? Do you just ramp in and bring in maturity, bring in duration?
Well, so you've got to, when you look at the 19 member states, I think you have to divide that group into what we call it, periphery and core. You've got to view some of those states as if they were credit, because as we've seen with the Italian situation, those government bonds don't really behave like credit risk-free instruments. They are very highly correlated to domestic political events. And there's also very high correlation to the other member states in that group. Look at just...
Okay, that's of course the network, and we got you the key updates from there. Let me just read out a few things that have come out on the terminal. Venezuela, of course, is saying that there is a plan to recover lost refining capacity. But more importantly, Iran is saying that the minister is saying that I see there is a likelihood in reaching the agreement. the Saudi minister is saying, don't want to talk about what we do without the consensus. The UAE minister is confirming that OPEC has had more difficult times than now. But more importantly, the Saudi oil minister is saying that oil supply release will be gradual. And the Iraq minister is saying that there is definitely an output increase. The meeting will be there to discuss how and when. Azleen Ahmed, I believe, of Argus Media is joining us on the phone line. Azleen, good having you. We don't have any idea about what the quantum is, but the statements seem to suggest that there is a consensus, and there is a consensus on raising production. In fact, the Iran minister has gone ahead and said that there is definitely a rise in output, just don't know the timing and just don't know how much. How would you read this?
Well, I think that is pretty much expected by the market. So we may not see a big drastic change in our prices, especially since the oil prices actually went up over the Asia Day today, because there were initial worries that there would not be any change in production. So I think that this is roughly what the market had expected. But I think that the details, the details would be key, because it will be timing, and also how any production increase will be divided among the OPEC producers. Because obviously there are not many countries that have spare capacity. So the question will be whether countries that have spare capacity, like Saudi Arabia and some of the smaller countries like maybe Kuwait or UAE, whether they will be allowed to take over the quotas of countries that cannot increase production, like particularly Venezuela. So I think that will be key to give the market some clarity about how this production changes will be going forward. But I think that we're not going to see a big change in the oil prices, because I think that this just basically reassures the market that we're not going into a period where there will be a shortage of crude.
There has been very little reaction to the oil prices right now after we've had some updates from the OPEC meetup. That said, you did say that what is going to be critical is quantum of change in production and also the timing. Are you working with any numbers and time spans with respect to these changes? And can you lay out some scenarios that you are working with right now?
I don't think we've got any targets or any scenarios ourselves, because we would just report what is what the OPEC ministers agree on. I mean, a few things that we have to keep in mind is that the expectations is that if the U.S. sanctions on Iran really just have a big impact on Iran exports, that will probably most likely happen towards the end of the third quarter. So there's still a bit of time, probably for the market itself, a gradual increase in production would probably be something that is more acceptable to the market and just prevent prices from falling sharply, rather than an increase in the next 2 weeks, for example. So I think that a gradual increase is probably what the market is looking for, and is preferable to meet any supply increase that usually happens in the fourth quarter of the year.
Okay, Azleen, we leave it at that. Thanks so much for taking the time out and joining us and taking us through your views of what we can expect from the OPEC meet. For now, we just have, well, barely a few updates, but we do, it seems, have some consensus building towards an increase in production of oil. That said, we're going to stay with oil right now, OMC specifically in this case. Mr. Hariyar, if I can take this point ahead with you. You do have a call on HPCL right now, if I'm not mistaken. How are you viewing the entire OMC space right now? And What's your take on HPCL?
See, I think most of the AMCs and specifically HPCL are, I would believe, amazingly undervalued. And I'll tell you why we believe undervalued. In fact, in the last few months, if you look at it, most of these downstream companies have corrected sharply. And the reason was quite simple, that crude could probably go up perpetually, and therefore, at some point, the government would put a subsidy burden on the downstream. See, two things have happened. Number one, the government has clarified there won't be any burden on the downstream companies. And that is almost clarified. Number two, I think what I understand based on the OPEC meet is that there is a very subtle shift that is happening. Like the WTO, I think the OPEC is gradually becoming redundant. So what's happening is today, your oil price decisions are going to be taken by USA, USSR, Saudi Arabia. Yeah. Plus, if you add Canada, Mexico, and China, you have 53% of the world's oil production. Right. Now, that is enough to decide the price of oil. Okay. So I think going ahead, it is not going to be about OPEC taking decisions on price. It's going to be these three people plus China, Canada, Mexico. They make 53% of the production. I think that will be determining the price of oil. So now I think the trajectory is very clear. The US does not want oil to go beyond $80. So we will see oil probably getting towards 70 and below 70. And to my understanding, OPEC will probably reduce its production cut from 1.8 million barrels per day to about by about 1.5. So about 0.3 would be the cut. So effectively, we'll get back to the pre-cut situation. So that would mean there will be a glut of supply. Price will come down, and stocks like HPCL, I think, are going to get substantially benefited by that.
Interesting. Hari, there is a gentleman who is asked a query on HEG and Graphite India. The reason I bring it up is because we were talking about it in the morning as well. The question is fairly specific. Do you believe that, and if you track them, whether HEG and Graphite India are in the last leg of the cycle, or can the cycle last a bit longer? The skeptics argue that they've run the course, but the management seems confident that there's some more steam left. What are your thoughts?
See, honestly, I would believe there's a lot more steam left. And the reason is the demand structure of HEG and graphite, which make those electrodes, they're largely dependent on the steel supply. And if you look at the steel supply trajectory in India, be it a JSW or Tata Steel or even SAIL, I think over the next 10 years, they are talking of steel demand going up by about 2.7 times and production going up by equal number. So I think we are looking at a big steel story. And this is actually what I call a parasite story. So if steel benefits, I think HEG and electrographite benefits along with that. So I wouldn't believe that the story is over. You may have concerns that it has gone up 6 times or 7 times in the last 1 year, but I think we are probably seeing the beginning. We could see a lot more action on these stocks.
Did I hear you say beginning?
I would say it's a beginning. I would say it's a beginning. We could have a lot more to see on these. It's hard for me to put a number, how much percent or how many times.
Which is fine. But so you're comfortable not just holding it, you're comfortable buying them.
Absolutely, absolutely.
You're comfortable buying them afresh as well.
We're absolutely comfortable buying both the stocks.
Okay. Hari, great having you as always. Thank you so much for taking the time out and being with us today, giving us your thoughts. Time now for a short break. I know we had to cut Manav Chopra's answer because we had to cut across to the network. So we'll try and come back and talk about some of the stocks which are moving up. Agam, something from your space. Page Industries is up another 2.5% today. So the expensive ones are getting more expensive.
More expensive, absolutely.
Yeah, should be interesting to talk about all of these on the other side of this very, very quick break. Stay tuned. Back with Countdown right here on Bloomberg Quint. 29 minutes to go. Bring up the world markets, bring up crude. Two things that we should highlight before we move back, focus to our markets. The world markets seem to be a happy place. FTSE, CAC, DAX, all of them up over 0.5% at least. Maybe the DAX is 1/3%, but the others are up. And Brent crude hasn't quite shown any kind of a negative reaction for now. Let's wait and watch. Once the numbers and the timelines come out, is when we'll probably see somewhat of a reaction coming in to these prices. Now, before we move any further, and a couple of news flows as well from Bloomberg News. Time for the Fab 4 stocks of the day. Let's do that first. Let's find out what's made it to Yash Upadhyay's list. Yash, good afternoon.
Good afternoon, Neeraj. So first up, we start with AstraZeneca Pharma. Now, the stock is in the pink of health today, having gained more than 7% in today after the company said that it has received the import and marketing permission for its new cancer drug in India. We're also looking at Poly Medicure. This one's up 6.5% today after the company said that its Netherlands-based subsidiary that has agreed to acquire 82% stake in Italian medical device manufacturer Plan One Health. Now, the new acquisition that would enable the company to bring new products to its existing range, and the deal is expected to be completed in the next 100 days. Ujjivan Finance is up as much as 3% today after the company clarified that it is in fact in no restricted or banned list from the RBI, and that NRIs and FPIs are allowed to purchase shares in the open market. And finally, we are also looking at Dr. Lal PathLabs. This one's up close to 4% after the on the back of strong gains in the last 3 trading sessions. In fact, it has hit a fresh 52-week high in today's day of trade, with volumes to almost double the 20-day average. Back to you.
Well, thanks for that, Yash. We'll be watching out for some of those stocks which have moved up, along with the indices which are doing quite well right now in the last 15, 20 odd minutes, where we've seen that sharp surge. But that said, let's move across and take stock of an interesting development that's happening with respect to, well, IDBI Bank. So the government may turn to LIC to buy out some of its stake in IDBI Bank. Sources told Bloomberg that the stake sale may happen as soon as next month. We have Bloomberg's Rahul Satija joining us to give us more details. Rahul, good afternoon. What do you have for us?
That's correct. After trying to sell IDBI Bank for 2 years, Indian government is finally close to making a deal. They are looking for the sale as early as next month. That's what our sources have told us. They've also shared with us that a potential investor could be LIC Bank. So this is a great news for IDBI Bank, which has the highest bad loan ratio amongst its public sector peers. The sale would lower the government's stake for the first time below 50% from 81% currently. This is the first for Indian Bank.
Okay, and any idea about what quantum? We don't know about that, right?
So yeah, we are definitely looking below 50% for the bank, for the government.
Yeah, which is what we'll go to, but the exact quantum of the purchase is not known as yet.
That is yet to be known.
Okay, great. And I'm sure, Rahul, you will keep us updated with all of this information as well. Thank you so much for putting out the news and for joining us in the studios and telling us about that.
Sure.
Now I have to cut across to the news story of the day, right? Hormuz, I think my producer was telling me that we are hearing from the Venezuelan oil minister. Do we need to go across to that? Okay, we can. Let's hear out the Venezuelan oil minister.
Do you have any kind of declaration regarding this topic?
Solamente una posición particular de Venezuela.
This is a particular position of Venezuela, and we have expressed that to our colleagues.
Y contamos con el apoyo igualmente de Irán.
And we count on the support of Iran.
Minister, thank you very much for speaking to Bloomberg Television.
So do you want sanctions measures?
All right, that's our money.
OPEC agreement with all countries. We'll keep on hearing this, I think, during the course of the next half an hour. An important one is that. Watch out for 2 key numbers. One is what's the quantum of the cut that comes about,
and the timeline with respect to the increase in production.
Yeah, it seems that everybody's on board and on the same page, so which is one good news. Now let's see what happens. Key things to monitor from a crude perspective, and maybe indirectly from an equity markets perspective as well, which are actually revving up in trade. I think all of them are up. Nifty Bank is up 1%. Mind you, what Yatin has put out as well, interesting that all of those constituents of the Bharat 22 ETF2 are seeing a bit of a leg up. Nalco, Axis Bank, etc., all of them are moving up in the session today. Anyways, we'll talk about all of those. Actually, good time to first talk about those. Manav Chopra, sorry I had to cut you then. Maybe we would have taken a call then, but at about 0.8% for the Nifty Bank, 0.5% for the Sensex or the Nifty, would you take a trade here?
See, at the current levels, definitely Bank Nifty looks more well placed because it has also exceeded its yesterday's highs. And most importantly, there are some good bottom formation, as I had highlighted in some time back about some SBI, and even HDFC is showing some sort of a momentum. So I think taking a trade in Bank Nifty would be more preferred. I see an important support close to the levels of 26,600 on the immediate basis. So keeping a very short and a tight stop loss for next couple of trading sessions. The overall range has been quite tight for the bank index. On the immediate basis, there could be a possibility rally towards 27,100. That is the immediate level that we can look out for. For Nifty, until unless we don't see a break above 10,850, I still think that Nifty could overall be in a range bound session. So makes sense only taking a trade for Bank Nifty as of now.
Okay, well, that's Manav's view on the Nifty right now. But I want to pull up an M&M. Now, it's one of the top gainers on the Nifty 50 today. But what I've also noticed that over the previous 3 weeks, nothing's really happened with this one. It's continued to move within a band and it's continued to consolidate. Sarvendra, can I take your view on Mahindra and Mahindra right now? It's currently trading at about 906. It is edging up higher, but considering it really hasn't broken above the levels of 920 on the upside, nothing too much to speak for on the lower end either over the previous 3 weeks. How would you go about and approach the stock right now?
Yeah, I think the stock is definitely the stronger looking stock within the lot. So within the Nifty pack, I think this is one of the stronger looking setups. The only key is that the momentum and price setups would improve once we break past 933, 933.50 to be precise, was the NSE high 4 weeks back. So we have been struggling around that number, and there's been some supply. So prices have kind of tapered down, and there's a small correction. So you'll have to absorb that supply to break past 935. So let's put a round number there. So once that supply is over, I think that stock has more legs, and it can definitely do 970, 975, if not more. So I would say break past 935, and then probably you get a trade till 975. So, but right now it's in a no-go zone, and it's being trading sideways. So best avoid it till there's a breakout.
Okay. Stay on, gentlemen, on to the chart of the day, and Crompton Greaves Power, the capital goods division of Crompton Greaves, is an interesting chart. It's seen some pressure in the recent past, but could it be at an inflection point? Nikki Mirchandani is here with more. Nikki.
Well, thanks, Neeraj. CG Power and Industrial Systems, which has been an underperformer in power T&D space, is clearly finding some kind of attractiveness in terms of the brokerage view. Citi and Kotak Securities both have upgraded this counter, citing the underperformance and the valuation matrix that the company is currently enjoying. In fact, according to these brokerages, the company's valuation seem to have factored in all the negatives, which include the delay in the loss-making international business sale. Apart from that, if you look at Citi, which has actually upgraded the counter to buy from sell, it has said that it has cited the reason as an evident operational rebound, while Kotak Security too has upgraded the counter to buy from reduce earlier that we've seen, mainly on account of the company's changing business mix and also the company's foray beyond the power business. If you look at the chart here, you would understand the blue bar here, which represents the share price return. You can clearly see CG Power has dropped as much as 36% over the last 1 year, which is relatively higher as compared to the fall seen by the other peers like ABB India, Siemens India, GE T&D. Also, in terms of valuation, the company's current PE 1 year forward multiple stands at 14 times, which is at a good 55 to 60% kind of discount that we can see for ABB India and Siemens India. Back to you guys.
All right, Nikki, thanks for joining us and giving us that chart of the day. We'll watch out for CG Power going in. But with that, let's get in another expert voice here. We have market expert Anand Tandon, who's joining us on the show. Good afternoon, Anand. Thanks for joining us. Let me start off with the latest developments across the globe, and that has to do with oil. Where there is some consensus building that there will be an increase in production eventually that may lead to at least some stability in oil prices, and is unlikely to see oil edge up higher, at least in the near term. Based on this, how would you read these cues and their impact on Indian equity markets right now?
Well, obviously any news which does not increase oil prices is good for India, considering that we are a net importer. But I don't know whether that will be a substantial difference. There can be a small bounce for a day or so because of the fact that oil prices can moderate. I don't expect that there will be an actual fall of any substantial amount in terms of the prices. Just that you may have a kind of, the prices may not go up from here. And that itself is reasonable news. The real cherry would be if the prices were to fall, but I don't think that's likely to happen, at least not beyond a very narrow range.
Interesting. Anand, good afternoon. This consistent upticks that we're seeing in pharma, yes, we know a couple of mutual funds and some other NFOs are already turning bullish on this space, but stocks have rallied about 25, 26, 28% from the recent lows that they clocked in. What's your thought now? I mean, is the easy meal being taken away already, and now do people have to pick and choose very, very carefully before they invest in pharma? If at all you're bullish on pharma in the first place?
So the short answer is that I am bullish in the long term. This is one sector that has all the ingredients required for it to go up. Less institutional ownership, a complete underperformance for the last 3 years. Some reasons for which, why the stocks should have underperformed, which are beginning to show signs of going away. And actually a lot of activity happening within the companies in terms of tightening their belt. Most industries, when they're doing well, tend to become very flabby. I think a lot of Indian companies are at least tightening their belt, and I think that is still something that the market has not yet factored in, because we have to still see that coming through in the results. So while the revenue pressure is obvious and has been passed through for the last several quarters, the fact that the EBITDA margin can actually stabilize or improve from here as the pressures ease, or if not ease, at least don't increase from here, is something that I think will surprise the market on the upside. So yes, I think you'll always need to find cherry pick your stocks, but overall as a sectoral play, I think pharma is now at least the worst is behind it.
All right, Anand, the other space which has been buzzing and it's been seeing a lot of strength is the NBFCs on the Nifty, Bajajfinance, Bajajfinserv specifically in this case. Is it time to be a little more cautious considering such a sharp turn in these stocks? And if not, otherwise, well, what do you make of these moves in general?
So, obviously the NBFCs have been the darling of the market for a while now. And what I would read into this is simply the continued momentum rather than anything fresh. Obviously, the Bajaj twins have been best performing, not only in terms of the stock markets, but also in terms of their financial performance. So there is nothing to crib about except the valuations. So, it's the exact opposite of everything that I said about pharma. It's an over-owned sector. The headwinds are now will have to come through. The managements are not yet factoring that in because they still think that they'll be able to pass on any interest rate increase. The growth is still coming through, but the likelihood is that, increase in interest costs will finally lead to some slowdown in terms of demand overall. And if that were not to happen, then you'd have to see the RBI pushing up interest rates even more, because otherwise inflation would have to move up. So I think it's in a exact opposite of where pharma is, that the best is probably behind it. However, it doesn't mean that it has to stop immediately.
Interesting. Anand, the other quick question would be on HDFC Bank. Assuming that the fundraise happens next week, what are your thoughts here? The HDFC twins are, of course, up and about in the session today, but fundamentally, with the book value adjustments that could happen, what would you believe HDFC Bank could do?
I think HDFC twins again have been significant performers for donkey's years. And given the environment we are operating in, I don't think that is likely to change. I mean, what is going to cause HDFC to not grow at the rate that it has been growing for all these years? And with a fundraise, that will obviously mean that you're able to continue. Again, slightly high on the valuations, but if you look at some of the other less less storied managements, I think you'll find that they are probably, some of them are even trading more expensive. I can't see any reason why anybody should do anything with the HDFC twins other than continue to hold on to them.
Okay, stay on, gentlemen. So much more to talk about. A couple of editorial pieces. Firstly, time to get you a sense of what dealing rooms are recommending in the session today. After a brief hiatus, Yatin Mota and Darshan Mehta, both of them are back with their channel checks. Good afternoon, both of you. Darshan, let's start with you.
Yeah, so a couple of stocks, at least, Cement Pack is something that's been spoken about, and the two large ones, ACC and Ambuja, that's what dealers are talking about. Post the big correction that's happened today, there seems to be buying action that's happening on both of them. And dealers do believe that, at this stage, some of the funds are actively accumulating the counters. Valuations have become attractive for both of them at this level. So mainly, it's positional buying that's happening in both of the counters. SRF is another counter which has actually fallen significantly. It's down another 6%, and every day it's falling on high open interest build-up. Dealers believe that the weakness may continue on the counter, so that's what they're watching out for. And Piramal Enterprises over the past few days has been rather active. The demerger buzz is again back in the counter. The management obviously had said that at one stage they look to create value by demerging some of the units, but the traction clearly seems to be suggesting that there could be some corporate announcement that is coming in. But Yatin, what are you hearing?
Well, SBI, that is one stock which has seen some correction, bouncing back smartly in trade today. Decent volumes as well, 2 crore shares traded in the cash market. Dealers expect short covering moving ahead as well. Today also on the back of short covering, dealers are talking about, the stock being higher. So, in general, the banking stocks have seen some bounce back in the last 20-30 minutes of trade. PNB Housing, the stock was down 5%, since the morning. Right now consolidating, and dealers are of the view that at lower levels, they are looking at some buying which is coming in. The stock has hit a fresh 52-week low in trade today. So, that is one stock which has not done well. Of course, there have been talks that PNB or Carlyle or, a few investors could sell stake. And, post that news, came out, we are looking at the stock which has corrected decently from the 52-week highs of 1700. And finally, UPL, United Phosphorus, that is one stock wherein dealers are recommending a STBT based on FNO trends, which is a sell today, buy tomorrow kind of a strategy.
Thanks a lot for that, Yatin as well as Darshan. On to what stocks could enter the FNO ban or come out of the FNO ban, and Agam Vakil has a probable list. Agam?
Right, so Neeraj, we are heading into expiry next week, and there's going to be a whole host of stocks which will eventually keep moving in and out of the FNO ban. On my radar right now we have Wockhardt. If you pull up the June futures, you will find no change there. It's the July futures which is seeing a surge in open interest, and there is a very high likelihood that it could move into the FNO ban. Let's wait and watch whether or not the next 10 minutes changes things, but for now it's looking unlikely. The next one is IDBI Bank. Of course, we've had news flow in IDBI Bank, and there you have it. That's the June open interest there for you, and another surge of around 23%. It's most likely to move into the FNO ban, and I'm quite certain that there will be a lot of speculators out there who will have placed their bets in IDBI Bank towards the long or the short side. And finally, this one is a tentative one, Jet Airways, which moved out of the FNO ban, and it has, as a matter of fact, kept moving in and out over the previous few days. Another likely prospect that it could move back into the FNO ban, so watch out for this one. Of course, there has been a surge in open interest when it comes to its June futures as well as July futures. So these are the three stocks that I'm watching out for as we move into trade on Monday as well as expiry next week.
Well, interesting. So do watch out for a couple of these stocks as well. Sarvendra, very quickly, any thoughts on these names?
I think we are still sideways to no view on those names that we have just discussed.
Okay, fair call. Let's talk about the closing strategies then. Sarvendra, I'll come to you first. Your top closing strategy.
I would go with an index now. We've not initiated a bank nifty trade. This bounce gives me a fairly good risk reward again. So I would essentially go with a bank nifty trade here, and I would say that if someone can carry this trade for say 2 to 3 days, you are currently at 26,800 odd on the futures. So let's make it a futures call, and we will say that you are selling at around 26,800 for a target of around 26,400, and you are keeping a stop loss in this case above 26,916.60 on the futures itself.
Okay, Manav, what about you? Okay.
Actually, at the current levels, I had highlighted about SBI, and looking at the chart formation, it has given a very good bounce back from its recent lows. Most importantly, the stock has declined in last consecutive 7 trading sessions. So, from the oversold levels, I think this stock could see a short-term rally. It will be a pure BTST trade, a stop of 268 for an upside target of 282.
All right. Well, okay. So let's take a chart check on Axis Bank as well. Considering we've had that head-to-head move that Neeraj was just addressing with respect to Bajajfinance and Axis Bank. Axis Bank, of course, also has advanced right now, along with several other private sector banks. Sarvendra, coming back to you, anything that you like here in this case? Today we have seen substantial strength in a lot of these banking names. What stands out for you? And if none, if you could just hazard or perhaps give us your view on what we can expect on Axis Bank.
See, Axis Bank, what Nifty has been doing for the last 6-7 weeks at around 10,800. Axis Bank has been a stock which has been doing it for the last 5 months, around 520. So 520 plus minus 15 points up and 15 points down is broadly the range that the stock has traded. So we can look at 520 as a VWAP or a value area. So we are currently there itself. So the direction is clearly missing. I would say that from 610 odd till around 480, a correction more or less is over. So 520 to 500 is not a bad range for delivery players, people who want to hold deliveries for 6 months or 12 months plus kind of horizon. I think around 500 to 520, that area, Axis Bank is not at all a good. It's a good delivery buy. So it's a good delivery buy provided you have 12 months horizon in front of you and you are keeping 480 as a stop loss. So anybody wanting to get into Axis Bank, 500 is a good place. 520 is also decent. Keep a stop below 480, 12-month plus. I see it scaling back towards 620, 650. So in that sense, I would say yes, it's a buy, but nothing in the short term.
Yeah, well, all of these stocks are inching up in trade today as well. The Bharat 22 ETF constituents, so to say, some of them are finding some favor. Anand, the last few days, we've seen commodity stocks come off quite rapidly. The Vedantas of the world corrected before finding some semblance of sanity the last couple of days. Tata Steel is still in the middle of this whole ThyssenKrupp fiasco or news flow as well. What do you do with some of these names, Vedanta in particular?
Vedanta has a problem now with the copper part of the business because of the the plant getting shut down in South India. Frankly, I don't follow the commodity cycle as much, and I don't think I have much to add to what you probably already know.
Let me ask you about this whole innerwear space, Anand. If you track any of those, or if you have a thought on that, it's a part of this consumption theme, right, broadly, but Page, Dollar and some of the others are continuing to rise. People are not unhappy buying them even at some slightly steeper valuations.
Well, that's been the story so far, right? That anything which is to do with consumption, whether it is actual manufacturing sales or the financing of it, is the one leg that the market has been running on. I have been arguing for a while so far without success that that is probably a grossly overplayed sector. We are now getting some feedback from some of the FMCG players, not necessarily the textile manufacturers, which seems to suggest that there is no significant volume growth, and that whatever volume growth that they are reporting is happening because there is a change in there is a greater increase in market share for the organized players. Be that as it may, so long as the growth continues, I think you will continue to attract investment till the market turns around. But it still remains one of the more overowned sector. If you have it, obviously you don't want to get rid of it. I would be hesitant to put fresh money behind it now.
Anand, recently Reliance Industries specifically has also single-handedly kept the markets relatively buoyant. By markets, I mean the indices. How are you viewing trade on this one? And if we were to draw a comparison to some of its peers, and I know now this time around we're going to have peers not only from the oil and gas space but also telecom. If I were to, draw some comparisons, not just with its peers but in the market in general, would you bet on something like a Reliance Industries even at this point in time?
The problem with Reliance is that it has now two large businesses, right? So on the telecom side, I would not be looking at it simply because though it is gaining market share, it has to do that by incurring a lower and lower tariff and kind of letting the industry bleed. On the other hand, the traditional business, the refining business, is going to do exceedingly well because refining margins are likely to remain fairly high. And despite the increase in crude prices, I don't think that the kind of demand-supply dynamics that is there for global refining at this stage is quite positive. And with the kind of complex refinery that Reliance has, the margins will be even higher than many of the others. So on the refining and the traditional business, clearly Reliance remains a buy. The other option, of course, the other option value that Reliance suggests is that the other businesses could be IPO'd at some stage, and that may actually put a more concrete number in terms of how to value the rest of the businesses, especially the retail and the telecom. And I think the market is also factoring some of that in.
Okay, Anand, we'll leave it at that. Many thanks for joining in today and giving us that perspective. Last couple of questions with our technical experts before we start wrapping up the markets. And Manav, let me come to you first. Two stocks. AstraZeneca has been on a tear and has only gained strength in the last few minutes of trade. And Symphony, which has really jumped up in the last few minutes of trade.
See, looking at the charts for Symphony, the stock has been trying to form a short-term bottom in place. There has been a short-term rounding formation and a breakout today with volumes. I sense this could be the stock which could be traded only for a very short-term basis. The undertone trend still remains weak. So on the immediate basis, we'll not be surprised to see a short-term move towards the levels of 1500 or 1550 odd. But one should definitely maintain a strict stop loss of 1420 for an immediate basis.
All right, well, let's also take up something like an India Cements, because that's also seen a surge in not only the underlying in the spot markets, but also surge in volumes to a certain extent. India Cements currently at about 112, and it is advancing by as much as 4.5%. Sarvendra, are you tracking India Cements right now, and what would your approach to this stock be at this point in time?
Oh, absolutely. I think cement is one space that's in regular coverage, and these are all leading and liquid names. So love looking at these charts always. My sense, and we believed that the overall trend for cement is down. So we were the first to call the end of the cement rally. But my sense is that the overall trend is down. Medium term is still down. The stock is very, very oversold right now. So I would say that if I want to play, I will play a bounce till 118, 120. So that would be the only target that I will put right now. I would want to see the stock, how it behaves post 120, if at all there's a breakout. So for the time being, I would say 118, 120 is the target. Anybody wanting to do that trade, you can keep a 3 to 4 point kind of a stop loss.
Okay, hold that thought, guys. We're just about a minute and a half left for close this week. So I'm going to toss it over to Neeraj to take us through the benchmark indices today.
Boy, what a reversal, Agam. Yesterday, the last 45 minutes we went down. Today, the last 45 minutes or 1 hour, we've really jumped up in trade. So about 1% higher for the Nifty Bank. The Sensex and Nifty 0.75%. Not bad going. The mid caps and the small caps will come up on your screen. Minor gains there, especially for the small cap space, but that's to be anticipated. Largely a large cap led rally. We saw some of the larger names move up, not across the board. So let me talk about some of the larger names, and then Agam will bring you up to speed with almost everything else in the liquid universe as well. Sunpharma up about 4.5%. Bajaj Twins, Bajaj Finance is up another 3.5%. Finserv about a 3% gain as well, so good going for those two. Mahindra and Mahindra about a 3% kind of an uptick. Gains for HDFC as well. Bharti Infra about a couple of percentage points. All in all, banks did very well, and despite Reliance falling about 2% and staying down, we had a rally predominantly because of what's happening to financials. HPCL still down about 1.5%. UPL continues to grind lower. Some losses to IT stocks like TCS and Wipro, but those were few and far in between. All in all, banks helping on market stage a fairly sharp recovery towards the close. Agam, what are you seeing at the broader end of the spectrum?
Well, I'm sure the complexion of the market and broader market specifically has also changed over the last 1 hour in trade. So I'm going to start off with some of those key gainers, and let's bring up MTN. This one usually doesn't show up very often in the gaining list, but today it's doing very well, and it is advancing by as much as 7.3%. That's followed by Adani Transmission. That's also up and about, along with several other Adani Group stocks. That's also advancing by as much as 7.2%, doing well in trade. And as you can see, the surge has come for a lot of these stocks only in the last half an hour or so. Inox Wind is the other one which has been doing fairly well today on the back of heavy volumes, and this one has seen a steady rise through the course of the day. On the losing end, we have SRF. It's declined yet again, and we have seen more weakness come through. In fact, well far away from, well below the mark of 1700 now. It's down at by as much as nearly 7%, and it's likely to close at the day's low. We also have Sri Renuka Sugars, which is also seeing a lot of weakness in today's day of trade. Of course, it's edged lower as well quite early in trade, down by as much as 6.6%. And Phenolics Cables, again, looking at some profit taking, some weakness seeping through, down by as much as, nearly 4.4%. So these are just some of those mid-cap stocks that I'm watching out for right now. And even though we have seen a little bit of an improvement in the advanced decline ratio in the broader markets, in terms of momentum, it's still fairly evenly poised between gainers and losers in today's day of trade.
Well, so that's the picture at close for you. We've done extremely well for ourselves. Will come up on your screen what the indices have done. The market breadth, well, we could have bargained for more, yes, but as we said, that it was not led by the small caps or the mid caps at all. It was largely a large cap led last 45 minutes of an uptick, and which is why the market breadth hasn't improved. but the Nifty and the Nifty Bank doing reasonably well for themselves. Maybe bring up the contributors list and then the weekly performances as well, Agam. Contributors and volumes, sorry, before we go to the weekly performances. Doesn't surprise me the contribution, the HDFC Twins, Agam, right up there.
Yeah, specifically in the last half an hour or so when we saw that surge in HDFC and HDFC Bank. This, of course, is through the course of the week. And it has largely been led by ICICI Bank and HDFC, as you can see out here. Bajajfinance, of course, advancing along with HDFC Bank and Bajajfinance. In fact, so the top 5 gainers of the top 6 are from the financial space, save for BPCL, which has also advanced by as much as nearly 3% this week. On the losing end, of course, we have a lot of weakness in UPL, Hindalco and Coal India from the mineral space are looking at some amount of weakness bearing down on the indices. But I reckon a lot of the strength is because of the strength that we've seen in some of these finance names. Let's take a look at the turnovers too, and I'm sure we've seen elevated levels when it comes to turnovers today, considering we are heading into expiry week. Now, the cash markets have seen a surge, specifically in the last 1 hour, because until 1:30 in the afternoon, the turnovers in NSE cash were well below 15,000 crores. And it's the same for the NSE F&O turnovers too. It's not in par to the kind of averages that we see over the previous few days. That said, it's still at around 7 lakh crores, and like I said, this number is only going to increase over the next 4 or 5 sessions. On the whole, well, the last 1 hour of trade, Neeraj, has turned out to be quite eventful.
Yeah, and just the mid-cap returns as well, Agam, just very quickly before we go to our experts back again. The mid-cap numbers will come up on your screen for the 5-day basis. This is what the mid-cap space has looked like. No notable contributions in the gaining side, but for maybe a Bata. Symphony is largely today's impact, so ignore that. But I think the set of losers as well. I can't see too many notable names. Maybe an SRF, which is down about 12%, stands out for me, but otherwise, pretty much par for the course. Some names like Vakrangi and JP Associates, you can't really bet on for the rally to continue. I don't know. To my mind, it's just Bata, which has had a reasonably good week amongst the top 4 performers at least.
Well, there you have it. Those are just some of those names which have moved in this week through the course of the week. That said, let's go across to our experts and see what they have to say when it comes to the indices. Sarvendra, coming back to you, the Nifty at around 10,800, back, reclaimed that 10,800 mark. But I reckon you would still remain skeptical when it comes to the markets right now?
Oh, absolutely. And the reason for that is this market has thinned out to the extreme now. So 2015 top, say 70-80% of the universe was moving. 2060, that universe went down to 50. Then 17, the universe went down to 25-30, and now the universe has shrunk to like what, less than 10%. And today, entire gains have been on the Nifty have been HDFC Twins and ICICI Bank, and for the Bank Nifty, it's been HDFC Bank and ICICI. So it's the index itself is thinned out to just 2 or 3 stocks moving every day and wanting to put higher numbers. And we all know, we've been in the market for fairly long. I think this does not work. This does not work. This is the end game before a larger decline sets in. So I still believe that on a larger basis of both the Nifty and the Bank Nifty, even though they might add 100, 200 more points, and there could be a short squeeze, if at all, because now we are heading into expiry week, which can be volatile. But beyond that, I don't think this breakout can now hold. I don't even see a breakout happening. But if at all it happens, then also I would still believe that it will not matter and it will not stay. And eventually, the more you try to stay around these levels, the sharper you turn. Going for the week, you can see that the NSE 500 or the NSE mid-cap all have weekly negative closes. It's only that the Nifty and the Bank Nifty have kind of clawed back, as I said, on the back of just 2 horses. So to run the entire show when you have 50 horses and to run just 2 horses, I think those 2 horses will also get exhausted. And then when all the horses are exhausted, then we know that the markets always follow the path of least resistance like water. And the moment everything is exhausted, the only way that you can go from there is down. So I think now we are headed for one sharp correction globally.
Fair enough. Manav, your closing thoughts. Would you agree with Sarvendra's thoughts right now? And what would your approach be to the markets right now?
See, at the current levels, when we are looking at the Bank Nifty closing specifically for this week, I think somewhere, things are just hinting for a short-term positive bias. I'm not talking on the larger scale, but on a very short-term basis, yes. Once if we manage to see some sort of a momentum on the upside, that could be a possibility. For Nifty specifically, as I highlighted earlier, 10,700 on the lower side and 10,850 on the upside. So this is a 150 points range in the Nifty. As long as we are in this range, you could observe this choppiness to continue. Only by some closing by Bank Nifty is hinting that there could be a chance of some sort of a momentum on the upside. If given a choice, I would only enter once this range is broken out. As if now, the formations are suggesting there could be a possibility on break on the upside, looking at the Bank Nifty and the stocks within the Bank Nifty which are giving some sort of a breakout on a short-term scale. Going forward, in case if you break that 150 points range, just add up 150 points on the immediate basis towards the trending side, and that could be the immediate target. So if you break 10,850 on the upside, a possibility towards 11,000 would be there on a very short-term basis.
Okay, gentlemen, both of you, thank you so much for taking the time out and being with us. Really appreciate your time and have a great weekend. Manav as well as Sarvendra. And with that, it's a wrap on this leg of Countdown from Argham and me and the team that put this show together. Thanks so much for watching.